Good morning, everybody. Good afternoon as well, and good evening, as we have participants from all over the world joining this webinar on the impact of the oil price declining and the solar energy stocks and market. You can hear me as I'm speaking right now. Welcome to this webinar. My name is Edwin Coate, and in case you want to know who's talking, I'm the founder of Solarplaza. It's not so important hear me talking today rather than our visitors and speakers. But let me take the lead with a question towards the audience, and we will have a couple of hundred people joining in today. Very welcome to you all. On the right side, you might see a poll because we're talking about the oil price. And the question is, of course, what do you believe as participants in this webinar, what the oil price will be at the end of this year? So if you can click and make your choice, we can online see the results and use that in our discussions following. Good. A little bit about Solarplaza. For those who don't know us, we organize events around the world. We have done so for the past 10 years in more than 60 events, more than 20 countries. And we have a network of about 50,000 people, and of which some 500 will join us today in this webinar. Some upcoming events, some little advertisement for our company. We have events coming up in South Africa next month, in Mexico, North America in April, and we'll be joining for a tour to India, talking about finance in June, in Japan, and we will do more events this year, around 14 in total. And if you want more information, feel free to drop us an email. We will show you at the end of this webinar a slide with the contact details. So if you're interested, feel free to give us a call or send an email. Good. We can take questions for practical reasons. If you want to send a question to us, there is a facility on the right side in the menu. I'm not going to promise that we can take all questions and broadcast them live because we were so many people joining in today. But feel free to drop us a question which we can use for the discussion with our panelists. Why are we organizing this event? Well, it's a very simple reason is we're all very interested in ourselves what is going to happen with the stock prices of solar, as we are strong believers that the solar market will grow continuously and will grow very rapidly again this year with less and less dependence on incentives. It might seem a good moment right now to step into solar stocks and keep these stocks for the coming 10 years. Well, what is happening? The stock prices are going down. And at the same time, we saw oil prices crashing. And it was actually just a lunch discussion we had in the company. So is there any correlation? Is there any coincidence that this is happening? So we thought, well, let's organize a webinar, find some experts, and have an interesting discussion about this. So happy to invite our speakers. You've probably some of you will know. You have seen of our previous events. We are very pleased again to have joining with us Jigar Shah, the original founder and president of Sun Edison. He's now the president and co-founder of Generate Capital. He was the former CEO of Carbon War Room and the author of the Creating Climate Wealth, Unlocking the Impact Economy, and also regularly discussing oil price and solar stocks at several of the events we've organized in the past. Jigar, welcome. Jigar, can you hear me? Jigar is here. We know. Okay, we'll come back to him later.
I'm here.
Okay,
I'm here.
Welcome, Jigar.
Thanks for having me.
Yeah, I'll come back to you later. First, let me introduce you the other speakers. Jeremy Leggett, he is the founder and board member of Solarcentury. He is also chairman of Solar Aid, chairman of Carbon Tracker Initiative. He's the author of several books, probably one of the last ones you have seen. Well, all the titles you can see on the screen. And Jeremy is very famous for his blogging about the relationship also between oil and solar. Jeremy, welcome. Jeremy, can you hear me? Jeremy,
yes,
is there?
Yes, I can. But the mute, there's a delay on the mute. So.
There was a delay. Apologies. You're here. That's important. You will be on later on. Let me first go to the next speaker. He is Vishal Shah, the managing director of Deutsche Bank, a very famous analyst, former Lehman Brothers vice president, former director at Barclays Capital, and he's been the top 3 alternative energy analyst from the years 2009 to 2013. Regular speaker at our events, and I think one of the most quoted solar industry analysts around the globe. Vishal, can you hear me? Welcome. Vishal.
I can hear you. Thanks, Edwin.
Okay, great. Okay, great. Welcome, gentlemen. We look forward to an interesting discussion for the coming hour. First, Vishal, I want to give you the floor. You have a short presentation of max 10 minutes. If you can show that on screen and take it off right away with some interesting analysis on what's happening on the oil price and solar. We're getting your presentation now on screen.
Can you see the presentation?
Yeah, I see it coming up. Yeah, you can talk.
Okay, great. So I just wanted to show you a few slides on what really is going on in the solar industry, and I'm going to turn to slide 2 and show you some correlation studies that we've done. And you can see that the recent drop in oil prices has had a significant impact on solar stocks. So the first top chart, if you look at 2013 performance, there was no correlation between the price of oil and the price of solar stocks. And if you look at the bottom left chart, that was still the case for most of 2014. The correlation was very, very small. But when oil started dropping in the fourth quarter of 2014, the correlation between oil price and solar stocks went up dramatically. And really what you're seeing today in the market, and when we talk to investors, there's a lot of macro uncertainty and a lot of energy stocks have gone down, and so solar stocks are also being impacted. So what we did is to look at the fundamentals of really what's happening in the solar sector. Of course, we all know it's policy and grid parity and economics, but we looked at the cost of oil-based electricity generation and other things. And so if you look at slide 3, you can see that in most countries, less than 5% of the electricity is generated from oil. And that number has obviously gone down significantly from the early 70s, where about 20% was generated from oil. In aggregate, world generates about 3.9% of electricity from oil. And most the major markets of solar, like U.S. and China, the proportion is even less. Of course, Japan is an outlier, but we expect Japan to be a relatively robust market, especially considering some of the policies in place. And then if you look at the next slide, the cost of fuel for oil power generation is pretty expensive. If you look at the cost per barrel of oil and the cost per kilowatt hour, even at $50 oil, the cost of electricity production is about 9 cents per kilowatt hour. And so we of course will find out from you guys what you think the price of oil is going to be, but we don't expect this low price environment to remain in place for the foreseeable future. In fact, you saw on Friday, the crude actually jumped up because there were a lot of rigs getting closed. So we expect that trend to continue over the next couple of months. And the more interesting thing is that despite the large swings in oil prices, electricity prices have increased over time. And the retail electricity prices in the U.S. have had a significant improvement over the last couple of years for the reasons that I'll show you in the next couple of slides. So the next slide, slide 5, again shows you the marginal cost of generation. And the marginal cost of electricity generation from oil is well above the retail prices of electricity in most cases. You can see, it's prohibitively expensive to produce, electricity from oil, especially if you're looking at this chart. And the next chart shows you what countries produce electricity from oil, and again, the most of these countries that we are seeing here are really not that big solar markets today, but even if they were to be, the previous slide that I showed you, the cost of production is pretty high. So we don't really see that as a big driver. And then the interesting slide that I find is this, which is, only about 58% of the total electricity bill in the U.S. is from generation. The rest is transmission and distribution, and that transmission and distribution expense is going up, and so that's why we expect the electricity prices in the U.S. to continue to go up and solar to remain competitive. So that's all I have to show, Edwin, on the slides. I'm happy to go through some of the other topics in detail, but I'll let you go run the show now.
Okay, thanks so much, Vishal. So to conclude, is there a relationship between the oil price and the value of the solar stocks nowadays?
Fundamentally, no. There is obviously there are some macro issues and investors, there are some technical drivers that are impacting the solar stocks, but there should be no correlation.
Okay, let's go over to Jigar. Jigar, do you have any specific comments on the presentation, the nice introduction by Vishal?
I did, and as usual, Vishal has done a wonderful job. I mean, I would actually like to focus on the other side of the argument, which is that I actually think that solar has benefited greatly by the reduction in oil price. I think that when you think about how much oil permeates our economy, whether it be in some of the components of making a solar panel, so some of the components made by Dow and DuPont around the backsheet and the EVO, I think, absolutely has oil components in it, and those materials will be cheaper because of lower oil prices. Also, you've got extraordinary amounts of travel costs with oil from China to many of the other markets, and so you're going to save a lot on shipping costs as well as the fact that when you install solar panels on rooftops, many of those trucks run on diesel, and my sense is that you're going to see a lot of savings there. So I actually think that the lower oil prices will save solar companies a lot of money.
Is that a significant part of the cost in the solar system? All these costs you're summarizing, like transportation, etc.
Today, everything is significant, right? I mean, when you think about where the costs have gone in Germany and the UK specifically, but also in India, 3 markets that are very, very cost efficient, what I'm talking about might be able to save another 3 to 5 cents a watt, which is a pretty big deal. I mean, I think oil is helpful there. The other thing that's really helpful is in India, for instance, Prime Minister Modi has used these lower oil prices to get rid of diesel subsidies. And I think that, through Jeremy Leggett's tireless work and other folks' tireless work, it may be possible to get oil subsidies to be reduced or gotten rid of completely in many of the African countries as well that still continue to have consumption-based oil subsidies.
Okay. Thank you, Jigar. In the meantime, we're showing the results of the poll among our audience, which is a very interesting result. Jeremy, do you have any comments on the presentation of Vishal and the comments made by Jigar, and maybe also on the poll? Jeremy, can you hear me?
Yeah, I agree with. Yes. I agree with what's been said so far. I think I'd put, from my perspective, I think there's a big game component to this, and when people ask, have renewables and solar been discomforted by the low energy price? It's not black and white. There are some areas where you could say things might not be going in our direction as much as we would want at really high oil prices. But here's the thing: I think we have to ask how are we faring relative to the incumbency? And the problems facing the energy incumbency in this low oil price environment are massive compared to any small problems that we may be faced with. If you look at the way the CapEx is being cancelled around the world, it's breathtaking at the moment, and I don't know how many folk listening are all over the numbers, and forgive me if you are, but let me just recite some headline figures here. The latest account that I saw totting up the cancellations of oil and gas CapEx has reached $170 billion now. And to put that in perspective, all fossil fuel companies everywhere in all sectors in the world in 2013 deployed $670 billion in CapEx. So this is really seismic change in the fossil fuel incumbency. And it's still going on. We're still in a low price environment, and although there are quite large numbers of folk who say it's coming back up again, and of course I'm in that camp, I'll come back to that point in a minute, there's a world of pain yet to be experienced. And as we get towards March and April, the oil prices remain as low as they are now, and all the massive amounts of debt, junk debt that has been accumulated in the oil and gas industry in places like the U.S. shale comes up for review. You know, there's a world of pain out there for the incumbency yet to happen. And even when if the oil price goes back up again, the problems don't end, because as analysts like Sirian Wood and others are saying, you know, you cancel all these projects, you fire all the qualified people that are being fired right now. You can't just turn those taps back on again easily. And so as I look at the problems facing the oil and gas industry, and of course, you know, I'm talking to people in that industry, many of us are, I think there are two things on the stage today that have never been here before. First of all, this extraordinary CapEx trend. It's systemic. You know, the big 11 oil and gas companies have trebled their CapEx since the beginning of the century, and that continues. It's multi-environment. It's happening in all the places where their frontiers are supposed to exist, including the shale. And they've got that problem on the one hand. On the other hand, they've got another emerging megatrend, which of course is the cost down in renewables generally, solar and storage perhaps in particular, and this sort of near vertical descent in our average costs since 2006. And that too is posing non-trivial threats to the operational models, and we've seen in the utility sector already the first big company buckle under that pressure and do a 180-degree U-turn on its business plan for the future, and that's E.ON, of course. And actually, I believe that you know, there's a very good chance that at least one of the oil and gas companies will copy that route to profitability and growth going forward over the next couple of years.
Yeah, you don't have a name yet to disclose, do you?
No.
Okay. Well, thanks, Jeremy. We'll come back to you later. Vishal, if you are still there, so what is the explanation then why solar stocks are declining at the same time? That might be a coincidence, but you know, with this forecast growth for the solar industry and solar market globally, why are solar stocks in decline? And would it be a good time to step in now into solar stocks?
Yeah,
Vishal.
I think, Edwin, as I said, I mean, there are a couple of things. One, it's just the macro and the technical factors. A lot of investors, you know, are, you know, that are investing in these stocks have energy as the focus, and they look at the price of oil going down and think that solar is correlated, and they're selling not just solar but alternative energy stocks, and that's part of the reason why you're seeing some pressure on solar stocks. And at the same time, I think there's something to do with, you know, at the time of the year, we have a vacuum of information from the companies. You know, in the first quarter so far, none of these companies have come out and said how business is doing. You know, the last time they came and talked to investors was sometime in November timeframe. So, you know, when you have, you know, declining macro trends, the headwinds, and at the same time, companies really are silent in the quiet period because of the reporting time, you know, you have this situation now. We expect that to change when these companies come out and report earnings and talk about how the prospects are looking for the first half and the second half of the year. And that will help these stocks. So there's a little bit of a reason why, you know, some of these investors are worried, which is, to do with, the profitability of some of these companies, not because of the price of oil, but because of other factors like the falling or the strong dollar or some of the falling currencies in other countries like Japan and the European Union. So there may be a little bit of concern about, what the earnings outlook of some of these companies may be because of, currency headwinds and because of, some concerns around policies in places like Japan. But overall, we don't see any major near-term impact from the price of oil.
Yeah, and you are quite positive about the global market forecast for solar, aren't you? Do you have any figure that you can share? What do you think the market volume will be in 2015?
Yes, we are quite positive. We are looking for another 20% growth, almost a 50 gigawatt market this year. The thing that I think investors are worried about is, what happens to the policy outlook for solar in light of the falling oil prices, and people are worried that, government subsidies or support for the sector is going to go down. And I would actually highlight what Jigar said, which is, I think many of these countries like India that have been, providing large fuel subsidies, I think because of the price of oil, I think they may be able to better utilize those subsidies into alternative energy sector, and I would expect more of those governments to come out to the forefront and do that. So I'm not as worried about the policy outlook for the sector as I think some investors would be.
Okay, thank you, Vishal. Let's go over to Jigar. Jigar, I think you have been claiming the enormous opportunities for diesel replacement in the world by solar and by hybrid systems. So the impact of oil there might be not a relationship with oil, but diesel is something else. Do you see a different perspective for diesel replacement in this current environment? And opportunities for solar?
Yeah, I think that's a great question, Edwin. I do want to just broaden the topic a little bit. It sounds like we've got three speakers here who are sort of bullish on solar, and I mean, I'm clearly one of them that's bullish. But I do think it's important to take stock about where we are. I mean, we're still in a manufactured economy that was manufactured by the U.S. Fed and the quantitative easing. I mean, one of the reasons why the solar industry is doing as well as it is today is because interest rates are very, very low. And so I do think that, it's important to understand that oil really is the lifeblood of our entire world. And the solar industry as a whole is actually a big cheerleader for oil. When you think about who benefits from the reduction in coal, it's the oil companies. Most of the oil companies are the largest producers of natural gas as well in the world, and so we're actually helping the oil companies transition our electricity industry from coal to natural gas. And so I think it's important to sort of note, it's because the solar industry hit $140 billion of economic activity in 2014, and at $140 billion, we're actually not a small startup industry. We're actually the dominant industry in the world on the electricity generation side in terms of dollars deployed. On the diesel side, I think what I would say is that, I think where we are very much interested in trying to figure this out is that there is a genuine fight happening between Bill Gates and others, as well as the solar industry. Bill Gates is saying that the solar industry is not up to the task in terms of actually providing people with electricity in the areas of the poor. And Prime Minister Modi in India has now announced that he, instead of extending the grid in India, he actually wants to see the solar industry provide solar home systems and solar lanterns to people throughout India. And so I think you are seeing the solar industry being given a tremendous amount of responsibility that we take quite seriously. I think SunEdison announced a few weeks ago that it was going to sign a contract for 5,000 solar microgrids with OMC Corporation in India. And so you see the solar industry actually stepping up and taking a huge amount of responsibility, particularly around telecom towers and microgrids that come from that. But I think that there still is a huge question on the part of governments as to whether we're going to be able to deliver or whether they're going to have to continue to use the diesel infrastructure as a backup to our abilities to perform.
Yeah. Can you hear me, Jigar?
Yes.
Yeah. So that was this interesting. You mentioned just briefly about Bill Gates. I believe there was a little dispute going on the internet between you two. Have you been talking to him directly?
Well, yeah. I mean, we've certainly talked to his people. I mean, I think that it's not, and I don't mean to pillory Bill Gates. I think this is a widely held belief by, the President of the United States, many parts of the EU. There are a lot of folks who believe that solar, in a distributed format, is not ready to actually carry the burden of providing essential electricity necessary to power an economy. I mean, that's really what we're talking about here. And I think that when you look at small island nations that have actually moved to 100% renewable energy, like Bonaire, for instance, they have kept all their diesel generators in place as backup power, even though they've got solar plus wind plus battery storage. And I think that that's the new era of solar now. When you think about the next 10 years, many of these countries, like South Africa and others, who have huge amounts of solar that can be deployed very quickly, are wondering whether solar is capped at sort of 10 or 15% penetration in their grid, or whether it can be allowed to go much higher because people are able to use advanced technology, IT solutions, big data solutions to load level their grid. And so I think that we believe the technology is there for high penetrations of solar. I think many folks are skeptical, and it's our job now in the era of low oil prices to prove them wrong.
Is that a lack of information on this on the team of Bill Gates and Obama? What is it that it makes them not a true believer in the possibilities of solar?
2015 is really the first time in the history of the solar industry that we've been asked to actually lead. In almost all of the previous cases, we have been sort of the barbarians at the gate saying, well, you guys are the establishment, we're the actual, change agents, and we're coming in to change the ecosystem. Today, our companies are worth a lot of money. I mean, SunEdison alone, between Terraform and SunEdison, is, worth over $5 billion. And so when you think about these companies that are worth multi-billion dollars, SunEdison is now worth more than Peabody Coal on the stock market. There's a certain level of responsibility that comes with that, and that level of responsibility has only recently been put onto the solar industry, and now the solar industry has to show that it was deserving of that responsibility.
Well, okay. Thank you, Jigar. Let's go to Jeremy. Any comments from your side, Jeremy, on this statement from Jigar?
Yeah, we are in danger of being all similarly bullish, but look, we can paint our pictures with different color paints. Nobody's mentioned climate change so far. Let us not forget that at the climate negotiations, with their target of a meaningful climate treaty at the Paris Summit in December that all governments have signed up to, essentially, real progress is being made. And as things stand, more than 100 governments have the intention of the eventual treaty saying we must completely decarbonize, net decarbonize the energy system by 2050, and that should be in the treaty as a pledge and target. Now, I mean, that's 35 years from now. And the oil and gas industry, with their capex calculations, are looking at projects that extend beyond that time frame if they can find investors who are willing to risk their money on those kinds of massive capex deployments. So this is how serious it is. The rubber is really hitting the policy road, and at least some of the oil and gas companies are taking this seriously, both as a threat to the traditional way of doing things, but also an opportunity if they can take an evolutionary approach to their business models. And that's where I think I would disagree with Jigar probably on one thing. I mean, gas should be an ideal bridging component with solar, wind, and the other renewables to this kind of low carbon future with its environmental imperative. Of course, there is an environmental imperative. It's the 2 degrees Celsius global warming ceiling that all the NASAs of the world are telling their governments, must be kept below. So there has to be a bridge, but what we've got is an oil and gas industry and incumbency that, for the most part, is digging in and saying, because of unconventional gas and oil, that is the future. And so we have this effort in the world, this considerable effort by the incumbency to put the lid on renewables. And here in Europe, for example, we've had the 12 biggest utilities going around capitals saying to governments, not, we're a bridge with renewables, but gas can do everything, all the electricity, all the heating, and your climate objectives as well, if you want. Goodness knows how they figure that, but that's what they say. And that's a fact of life in the marketplace. Now, that too is changing, and in the case of E.ON, turning on a sixpence, because they were a member of that so-called Madrid group who are making those policy arguments, but now that they've said they intend to focus all their growth on clean energy, energy services and renewables, presumably they're going to change their lobbying tune as well. So it's a very dynamic situation, and changing by the week. And I think the Jigar said that 2015 is the year where we have to step to the plate and assume the kind of leadership role we have.
Exactly.
We can expect to see defectors from the energy incumbency during this year. I predict that pretty safely on the utility side. We can expect to see big withdrawals of financial license from the energy incumbency this year. That's already happening because of the divestment movement, more particularly the engagement and pressure being put on capex. So there's a very positive story that could evolve if we can manage all this in a sustainable way collectively.
Yeah, so you think that the solar industry in particular is ready to take the lead, also in the discussions in Paris, this conference coming up, because this is the ideal opportunity to say, here all we have, here a solution, and we can take the lead, and not only see gas as a bridging fuel, but we can do with solar, with storage, we can solve the solutions. Is the solar industry ready to do that?
Well, we can certainly do a much better job of persuading politicians and key influencers that we are ready to go to a low carbon future. But we have to have an appropriate degree of humility here. Don't forget, we're highly disruptive. We're doing these things to the energy incumbency at still pretty tiny levels of penetration of global primary energy, right? So
yeah.
There's a substantial change management challenge that we all have to be very clever in.
Yeah, Vishal, sorry. Is the solar industry approaching this in a clever way? You're in the financial world, deeply involved in the financial world. How would you? What will be your view on this? Vishal, are you there? Okay.
Yes, can you hear me?
Yeah. Yeah, we can hear you.
Yeah. I think the financial investors are clearly starting to look at solar in a different way. I think it's a little too early because what a lot of investors wanted to believe is that the economics are sustainable, that these stocks are going to start working. I think you had a new set of investors through the yield codes come to the market, but you've seen a slight pause, and I think a lot of investors still remember the crash of the 2008-9 timeframe. So, there is a healthy level of skepticism for the solar investors, and I think what you need to see is some of these businesses, the business models that have evolved, like the Edison's yield code and some of the other yield codes that have come out, execute on their plan or maybe even exceed expectations, show that they're basically going out signing projects globally and signing PPAs at a very competitive rate and making money, and I think if they can do that, I think you are going to see there's a lot of pent-up demand. A lot of people who are waiting on the sidelines. I mean, I see a lot of investors doing the work on the sector to understand the economics, a lot more this year than last year. But they're not, they're just looking at the stock prices. They want to buy the stocks, but they're just, reminding themselves of what happened in the past, and they're just waiting for some more signs of execution before they get in.
Is it then the handicap of the solar industry that it's so much reliant, or there's too much dependence on incentives in various markets that this dependency is holding them back for major investments in stocks?
I think there is clearly less dependency today than a few years ago. I mean, a few years ago, that was the most important question and like the biggest concern investors had when the majority of the demand came from a handful of European markets. Today,
yeah.
I think people are worried about, maybe Japan and there's a high reliance on UK for at least some part of 2015. So people are worried about what will happen after those markets go away. But the good news is that you've got the U.S., China, some of these other markets like India that have a lot of potential, and so the demand is a lot more diversified today, and dependency is less. So I think the incentives and the overhang of incentives is still there, but it's a lot less than a few years ago, and I think it's going to hopefully improve. I think once these markets, the policies and subsidies of these markets go down, and the absolute terms, I think the reliance is going to be a lot lower, and that will help investors.
So Jeremy was talking about this major shift of capital. Do you see this happening as well in the coming year or years?
I agree with Jeremy. I think that there is definitely going to be a big shift over the next couple of years.
What kind of companies or major investors will be in play here?
We have highlighted a lot of for some time now investments in the downstream part of the value chain, and we like Solarcentury for that reason, and a few other downstream solar companies that are benefiting from this trend. So I would just continue to highlight those recommendations. Solarcentury, SolarCity are the two names that we've been recommending investors look at for a while now.
Yeah. So Jigar, what do you see?
Yeah, I just wanted to.
Yeah.
No, go ahead, Edwin.
No. If you have a comment, please go ahead.
Well, I just wanted to make sure that it's clear to everybody where we sit here, right? I mean, I think that the money that Jeremy's talking about is not coming to the solar industry. The money that Jeremy is talking about is very, very high-risk money that wants 25+% return on investment. It's about $200 billion or so, and that money is not coming to the solar industry. That money will go somewhere else that likes high-risk plays, like the chemical industry or other industries. The money that we're attracting in the solar industry is generally low-risk yield co type money, which is pension fund money and other monies. And a lot of the pension funds, have frankly not taken the time, even though Jeremy and I and others have tried to educate them, have not taken the time to really understand our business model and our markets. And so I think one of the reasons why our stock prices are tied to oil prices is because they tie all energy together and haven't differentiated the story. I mean, let alone the differentiation between the stocks. I mean, the shocking thing to me is how all of the solar stocks go up and down as one big monolith, as opposed to investors taking care to understand the differences between First Solar and SunEdison and SunPower and Trina and Yingli and other publicly traded stocks. And so I do think that there is just with all the work that Vishal has done, there's still a fundamental lack of understanding on how to differentiate even the individual names within the solar industry.
But haven't the industry already consolidated in a way that the winners are already there? For all of them, there is a good perspective in the future market. If the market will continue to grow with 20% per year, there should be room for these top 10 players, isn't there?
Oh, I'm not suggesting otherwise, but I think when you think about Vivint Solar and SolarCity and the difference between their stock prices, or SunEdison and SunPower and the difference between their business models, they're night and day. I'm not suggesting one is better than the other necessarily here on the webinar. I am suggesting that that they have completely different business strategies. And so not only are their stocks correlated to oil right now, which is a mistake, but their stocks are also correlated with each other. It's amazing how much many of these stocks really, move together, as opposed to people saying, well, we like, First Solar strategy in Chile, or Sun Edison strategy in India, or SunPower strategy in the high-efficiency luxury market.
Yeah, but so it all seems to be a lack of understanding, a lack of information, or getting the information in the right place of these, like these pension funds. Why don't they understand how the position of solar in the energy industry? That is quite typical.
I'd love to.
Yeah,
I'd love to hear Vishal's point of view on that, but frankly, I think that we have been doing a lot of education work. I think the pension funds, until probably 2015, were not interesting. They would politely listen, which is wonderful, but now they're actively asking questions because they feel like they want to invest. This is why 2015 is the year. There's a lot of money now that's looking to come into the solar industry, and the solar industry actually has to deliver this year. Quarterly earnings, all of our targets have to be delivered this year. It just can't be in the future, in the future, in the future. We have to actually deliver this year.
Yeah. Vishal, can you comment on Jigar's question?
I agree. I think this is the year when investors are going to really, start looking at it in a much more proactive way. I think you already saw that last year with the, with some of the IPOs that came to the market in the yieldco space, and I think that drove a lot of investor interest. I still think that if you have a good, high-quality company that wants to raise capital in this environment, I think there will be a lot of demand from a new set of investors. And I think if the companies that have come to the market, if they execute, I would not expect low-cost capital to be a constraint. I think that they will be able to get sufficient capital to raise, to execute on their plan. So, and that's the real the big catalyst in my view for the growth of the sector. If we don't need any more policies to help the sector. I think the technology and the policies are there, and the financial catalyst is really the big growth driver over the next couple of years in our view.
Yeah, Jeremy. So that means positive news. Vishal said there is a lot of capital available to extend the application of solar, even in unsubsidized markets. Do you agree with him?
Yes, and I think it will be during the course of the year a changing type of capital as well. Let's not forget that a lot of these capex cancellations by the oil and gas industry translate into increased dividends. That's what the investors are asking of them, and so that sort of baseline 100 billion or whatever it's been of dividends over the course of recent years is going to increase. That's going to be reinvested in perceptions of growth areas. And then, let's come back to the incumbents changing course. I mean, what is happening in E.ON right now? What choices does that company have? Germany's biggest utility. Well, it seems to me that the walls must be covered in flip charts of where they're going to go with their shopping spree, because they're not going to be able to do what they say they're going to do with clean energy just on internal assets. They're going to have to buy up, what's working well across multiple segments in the clean energy space. And here, it won't be lost on other companies that there's a really significant first mover advantage. It's like, big companies who leave it late when the really attractive prospects have all been hoovered up and molded together into amazing new fighting machines with the full strength of those big energy balance sheets behind them. Wow, they really are going to be at a disadvantage. A bit like Shell going into the American shale as late as it did. We all know what happened there.
Yeah. Okay, so talking about the investors, there was a question coming in. Maybe you can respond to that. Will the main investors be sovereign wealth funds like from Dubai, India, or private funds?
Well, it's about the type of money. It's not about which money. So within the sovereign wealth funds, it'll be their sort of fixed income, lower risk, sort of dividend money that's coming in, and you already see that. Kuwait sovereign fund is already invested with SunEdison and others, and so I think that it's a type of money. The pension fund money is the same, right? It's the type of money that's going in. It's the money that's sort of expecting 8, 9, 10% returns, not the type of money that's expecting 25, 30% returns.
Yeah, and is it possible to make this kind of returns in like this 100 gigawatt market in India in the next few years? Vishal, can you elaborate on that? Vishal?
I think so. I think the returns that you're looking at the current economics for solar are highly sustainable. In fact, I would expect that, I think what you're seeing today is a lot of the private equity investors are looking for much higher returns because, there's some scarcity of capital and there's, some risk associated with new technology. And as that goes away, I think you're going to see more competition among investors, and I think the returns are going to go down. But you're going to see that those returns stabilize around that, 10-12% level in my view.
Yeah. Jeremy, do you have any comments on that?
No, nothing to add. Agree with that.
Okay, good. There was another question coming in, which is kind of related. Is that will energy storage make a difference in this whole discussion? Is this, as someone called, the elephant in the room for the next few years? Jigar. Jigar, can you?
Well, energy storage is going to have a huge difference. Yeah, but energy storage will not have a huge difference for solar. Energy storage will have a huge difference for the utility industry. What you found was in the 1990s, the utility industry used natural gas as a balancing technology to balance the grid for frequency regulation and other, demand-supply equalization efforts. And what they're finding through the work that AES, frankly, has led and pioneered is that battery storage is far cheaper than running natural gas power plants 70 to 100 hours a year. So for all of the natural gas plants running 70 to even 200 hours a year, which in the U.S. it's about 10% of all natural gas plants, are being replaced with storage. And that storage is adding storage within the electric utility system, which desperately needs it. Electric utilities is the one commodity that does not have built-in storage within its supply chain. You have built-in storage within food, within fuels, within many different commodities, but not in electricity. And so that is why storage is going to be taking off like a rocket ship over the next 4 or 5 years. But in terms of time-based storage, which is what solar really needs, which is, charging now and discharging at night, that will not be cost-effective for storage, unless you're in an island nation that's charging 45 cents a kilowatt hour. But in most markets, solar backed up with storage will not make financial sense for 5 to 10 years.
Okay, and any view, like Jeremy, Vishal, do you agree with what Jigar just said?
Yeah, but let's roll transportation in here, and this is why the far-sighted strategic planners in the oil companies are seeing threats to their business models down the track. Now, one of the crews that are competitors to Vishal's team, gave us a report recently where they had calculated that by 2020 across the OECD, we could all have a solar roof, an electric vehicle in the yard, and a bank of batteries in the home, and that for that trio of technologies, which fixes some of that because of the feeding from the car into the home, fixes some of the issues that Jigar talked about. The capital cost would be repaid in 6 to 8 years, and the homeowner would be making 7% pre-tax every year on the investment. So, if that's even halfway true, personally I'm not enough, I wouldn't claim, great expertise in the storage area, but if it's halfway true, the queues have been coming a long way out of IKEA and B&Q and whoever else, starts making offerings around this trio. So I think that's very disruptive. It's very exciting. And of course, in the intermediate to long term, that's existential threat to an oil-based business model.
Yeah, you were referring to the UBS report, I guess.
Indeed, yeah. Mm.
Yeah, Vishal, is it? Do you agree and underline what UBS found in that report about the disruptive potential of storage, even in the short term? I would say, like within the next 5 years.
Yeah, actually, Edwin, I have not seen the report, but I would just generally say that, you know, we do believe in the disruptive potential of storage, and I think consistent with what I think Jigar said, I mean, there's definitely huge potential for the utility industry. I also think that commercial solar plus storage, you know, has a lot of potential in some markets in the U.S. initially over the next couple of years, and then, you know, some of the international markets. So I think there may be a small change in policy required for this growth of solar storage to grow, to you know, to take off at least in international markets, but I do see a lot of potential.
Okay. Well, we're shifting a little bit away from the original topic of the webinar, which is the correlation between the oil price and the solar industry stocks. Maybe we can go back with that. And before I ask you a question, let's show the poll where we ask people to vote what they expect to be the solar market capacity for 2015, the annual sales. If people start voting right now, then we can show it in the meantime on screen. And Vishal, maybe you can, so you were the first addressing this, and you said you're expecting around 50 gigawatts for 2015. Is that correct?
Yeah, that's right. Around 50 gigawatts. We expect China to grow. We think the U.S. market is going to be the biggest growth market. You know, and some of the other markets are going to remain relatively stable this year.
Okay. Let's see if my colleague can put the results on screen. And that seems that they rather think you're quite pessimistic, Vishal, if I see the majority of them voting for between 50 and 55 gigawatts. Jigar, what do you think? Do you have any idea? Are you following these reports, and do you have your own opinion about market volume?
I think Vishal is. Yeah, I think Vishal is right. I think it'll be right at 50 gigawatts. I think you're finding that China is having a much harder time understanding how to integrate distributed generation than they first suspected. You know, I think Japan is realizing that paying 44 cents per kilowatt hour doesn't make any financial sense for their country, and they're reducing their feed-in tariff. I think India is the wild card. India, Brazil are the wild cards. You know, the U.S. market is going to grow tremendously this year, of course, and again in 2016 before the expiration of the ITC. But I think there are a lot of folks who want to believe that India and Brazil can actually create a sustainable high-growth market, and, you know, just both countries have a history of not being able to follow their promises, and so I think folks are taking a wait-and-see approach there.
Okay, let me play the role of the advocate of the devil, advocacy of the devil, and say, okay, the U.S. has the extension of the ITC in 2016. Japan is discovering the high costs related to their feed-in tariffs. China has difficulty with the rooftop program. Brazil is not yet there. There's a couple of megawatts a year being installed. 2016, 2017 might be a difficult year. So can we still expect a major growth in the industry and in the solar market for the years to come? Jeremy?
Yeah, that's where, when we're talking 2016, 2017, that is an age away in an energy world where we're getting dramatic news stories every time we open our computers up every morning. So, you know, by then you have to ask, what else will be happening in the world? The shale narrative may have collapsed completely, like a house of cards, exposed as a bubble in the United States with ruinous, you know, economic consequences holistically, if you roll in all the junk debt and how exposed that would be. As for exporting it to the rest of the world, well, you know, you'd be able to forget that in most countries for all sorts of reasons. And if you take Britain, let's just think of Britain as a case history here. We have a government that is, you know, envisaging supposedly that it can frack its way to such low gas price prosperity that it'll be able to bring manufacturing back to this country. That is bonkers. And when you watch the, you know, things that are happening in America, but that's what they evidently profess to believe. Once that dream, illusion is taken away from them, you know, where else have they got to go, really, other than the green industrial revolution, which is where they started in terms of the thing they wanted to see in opposition. So we could have, you know, big as the demand for solar is right now, we could have real queues of multiple stakeholders saying, you know, we have really got to start backing this stuff seriously now, not just solar, but all the brothers and sisters involved in the clean, smart energy future. And that could easily happen by 2016, 2017, and cancel out some of these, you know, more narrow constraints about what may or may not happen to subsidy regimes in different countries.
Okay, I would like to hear the opinion from Vishal on this as well. Vishal, like the scenario that Jeremy is picturing here is the drivers for the solar industry might be external rather than what's happening in these major markets like US, Japan, and China. Do you agree with him on that?
I agree. And I also would say, you know, there's, you know, between now and 2016, of course, a lot of things can change within the solar industry. I think you're starting to see a reduction in customer acquisition costs and more awareness for solar. I think it's easier to do solar projects in major markets like the U.S. Some of the other big markets like India and Brazil have not even started to take off. And just don't forget, I think in 2008, 2009, we had the same concerns about what will happen to the solar industry after Europe goes away, and we've transitioned away from Europe into some of these other markets. If I look at the, you know, the mix of shipments for some of the Chinese companies, nearly 90% of the shipments were to the European markets back in 2008-9 timeframe, and today, in the case of some of the big Chinese companies, only 10% go to Europe. So we've successfully transitioned away from Europe to some of these other more important markets, and I think that may happen again in 2017-18 timeframe.
So if it shifts, if it goes to another direction, apart from India, which other markets do you expect to boom? Let me be critical about Brazil. We have been considering to organize something in Brazil ourselves with Solarplaza, but actually, right now, not much is happening, and it's being, you know, auctions are being postponed again and again, and it doesn't seem like the future big markets for the solar industry. What other markets do you see where the boom might take place, if there is like a, you know, backslash on Japan or maybe on China, maybe even in the U.S.?
You know, so what's also going to become more interesting is that you will not have one big market driving growth. If you have a 50 gigawatt market growing at 20% a year, you really need multiple markets, and I think that will also, you know, create a much better risk profile for the sector for a lot of investors that are looking to invest in this, you know, on the project finance side. Right? So, and you know, what you're seeing is, interestingly enough, a lot of these yieldcos have access to low-cost capital, and they're now looking out and hunting for projects globally. And you know, whether it's Analyst or some of these other companies, they're going out and building teams and creating platforms to grow in those markets. And I think that will create a much more diversified market, global market, which is sustainable. You know, it could be you know, some of the other Southeast Asian markets. It could be, you know, it could be even China and the U.S. for you know, I think, and some of the other parts of South America.
Okay, Jigar,
yeah, I mean,
I would love to hear your opinion, because also some question coming in, how this falling oil price and talking about global demand, how would this impact the takeoff of solar in the Middle East? Because lately there was this conference in Abu Dhabi where someone from the Ministry of Internal of KCare in Saudi Arabia said that you know, there will be some postponement on the renewables program. So how will this lower oil price impact the demand for solar in the Middle East? What is your opinion?
Well, let me just follow on from Vishal's comment first. There is nothing that will happen in 2015 that's more important than SunEdison's emerging markets yield co. It is by far the most important thing to happen to the solar industry since the invention of the crystalline solar silicon panel. What will happen with that yield co is we will finally get some external place to set what the equity interest rate should be for solar. Today, we have no benchmark for that. In India, it's maybe 20% rate of return, 25% rate of return. In Africa, in Indonesia, Thailand, Philippines, there is no external way to set the cost of equity capital for the solar industry until this emerging markets yield co goes public. And once that happens, there will be 3 more emerging markets yield cos that go public right after SunEdison's. So if you're watching one thing, that is the most important thing to watch in the entire solar industry this year. So I think when now to switch to your discussion in the Middle East, look, the reason I stopped going to the Middle East after 2008 is I think the Middle East is a lost cause. I mean, whether it's Saudi Arabia trying to figure out whether King Abdullah was going to die and he was constantly in New York, and there was all the drama between KKR and Saudi Aramco, the whole place is a waste of time. When you look at Qatar, when you look at Abu Dhabi, when you look at Bahrain, Kuwait, every one of them has a reason. Literally, the death of their entire economy is at stake. That's why they have to do solar. I mean, for Saudi Arabia, they're burning 26% of all of their own oil at less than $10 a barrel to produce electricity. It's the dumbest thing you've ever seen. They absolutely desperately need to move to solar, but every single person is taking their business class and first class flights to Riyadh and coming up empty-handed. And so I think the solar industry has now given up on the Middle East, and so now you have all the B players that are going to the Middle East, trying to get their deal. But the SunEdisons of the world and the others, SunEdison still has that promise to the Saudi kingdom of building a silicon manufacturing facility there, but they haven't gotten...
It was a $4 billion investment, was it?
Right, but they were supposed to get power purchase agreements, of equal amount for solar projects before they started construction of the project, and they haven't gotten that. And so for all of you people who think the Middle East is going to be the growth pattern, I'd wait until the next decade. It'll definitely be after 2020.
Jeremy, would you agree with Jigar here?
I'm a believer in, I'm very reluctant to take history and project it as destiny. I agree there are big things to be frustrated about, but these things can turn on a sixpence, and at those rates they are literally incinerating their own exchequer. So, at what point do the green buttons get pressed? We were in Saudi Arabia together recently, Edwin, and, we saw a whole industry in waiting of very frustrated, mostly Saudi business enterprises. So, let's see. I think it might not be as gloomy as Jigar says. And just to go back to Brazil for another example of where, markets could emerge very quickly. Look at what's happening there, and all the hoo-ha about their massive oil deposits in the subsalt, and the excitement over that and how it was going to transform the economy. Well, as things stand, we have Petrobras approaching the capital markets for a capex bill over the next 5 years of $221 billion. I really love the one in that number, the accuracy with which they're able to predict their capital requirements to access all this oil in this incredibly technically difficult environment that has never been actually produced from before. There are also some problems with the Financial Times describing Petrobras as a company that's too big to fail and too corrupt to carry on as it is. So there's that consideration for investors. Now, how's that going to play out in the next few years? This is a country that's capable of doing great things, with real. I find it very difficult to believe that Brazil isn't going to look at solar and turn on a sixpence, especially when they pick up some of the things that we know, that deliverable energy per hectare, solar these days can be anything up to 100 times more efficient than biomass, they could easily be a big upside surprise in a country like Brazil because of these wider dynamics in the energy industry that obsess Anunnaki-type people like me.
Okay, thank you, gentlemen. Let me do a very quick round and let me end with the basic question, which was one of the drivers to organize this webinar, which was kind of a personal interest. So with these stocks declining, solar stocks declining, and thinking about the prosperous future of the solar industry with at least a decade of growth coming up, and everybody very positive. Would this be the right time when apparently these large investors are withdrawing from energy stocks in general and taking solar stocks down? Would it be an ideal time now to step into the solar stocks? If you can do a very quick round and then finish with your last statement, that would be very nice. Vishal, can I start with you? Would it be the perfect timing now to get in?
Yeah, I think so. Edwin, we like the sector fundamentals. We think that 2015 and 16 are going to be really strong growth years for the industry. We continue to prefer companies in the downstream part of the value chain, Analyst and SolarCity.
Okay. Well, thanks so much for joining, Vishal, and also very glad that you will join us in our next event in Mexico next month. I hope to see you there. Thanks so much for joining. Jigar, currently at this time, is now the time to step in, or should we wait for the emerging markets yield curve from St. Edison?
No, I definitely think that the solar industry is experiencing a huge boom, and this is the time to get in and hold the stocks for a long time. I just think that what this oil price solar sort of stock correlation means is that the average investor is simply uneducated as to the dynamics of the solar industry, and I think it's going to require a tremendous amount of additional work on behalf of Vishal, myself, Jeremy, and others to educate the marketplace so that we can be properly valued.
Okay. Well, thanks again, Jigar, for you as well, for joining and sharing your opinions. Highly appreciated. Jeremy, do you agree with the gentleman that it would be an ideal moment in time right now to buy into solar stocks and keep them for a long time?
Yes, but then I would say that, wouldn't I?
Okay. Thank you so much, Jeremy. I appreciate very much that you joined us today, and I would like to thank all our listeners, a couple of hundred this time, from all over the world. Very nice to have you all joining us in this webinar. You can see a slide on the screen with some further information of our upcoming events, and also we will send you an email with the download address where you can see some of the presentations and also the recordings of this webinar. Thank you so much for joining, and I hope to see and hear you very soon. Thank you. Bye-bye.